It is the technology sector, which has been the leading sector anyway.
Well, Bruno, welcome back.
Good morning, Jessica.
So the US market is doing fireworks, but just how high can it go?
Well, let's look at the weekly charts. What we've got here since August of 2016 is a nice upward trending channel. And we had the last 2 weeks kind of a doji, or this little cross, which indicates a corrections time. We also noticed during that correction time, the VIX was moving up from 10 to 13%, and now it's moving back down below 10%. So that seems to confirm that the correction is over. And the way we compute targets is, for example, we take a low and a high, and then project 162%, and that gives us last time 2596, and we noticed that we stayed around below 2600 for a little while. That was what happened in the last 2 weeks. And now we do the same with 2417 and the 2496, and that project to 2710. And we see that the momentum is less overbought than it was before the 2 weeks correction. And the momentum, long-term moving average, they can cross up again. So this is a target which is not too extravagant. It's probably reachable, probably beginning of January.
And when assessing the risk, are there any risks in the short term?
Short term, well, let's look at what really happened during the last 2 weeks on the daily charts of the S&P. What you notice is spikes down, and which are immediately filled in the sense that people were buying the dips. And now in the last 4 days, we've got a gap up here, a second gap up yesterday. These gaps are important. They just show the urge to buy or to cover shorts. And what probably we can consider that as long as the market is above 2580, there is a relatively few risk of reversal down to go to 2550. So 2580 is what we should keep in mind and be sleeping well as long as it remains above it.
And you sound very confident here. So what makes you so confident about all of this?
Well, it is not only the S&P 500 which is making a higher high. It is a lot of other things. First of all, it is the technology sector, which has been the leading sector anyway. We see here higher highs on the SOX index. We'll see it on the NASDAQ 100, the large cap of the technology. It has been correcting in a way which was a relatively flat rectangle. So that means it is a pause in an uptrend, and here we go, rising again. And we see the momentum is also just moving up from the 50% levels that correspond to the rectangle consolidation that we had here in the last 2 weeks. And that suppose another 60% rise. So that's why we project right away 65 on the NASDAQ. But it's not only the NASDAQ. You see what happened on the small cap and mid cap. Well, what are we doing here? Look at the black line. Higher highs on the small cap, higher highs on the mid cap. So the breadth of the market is widening again. So that means everybody, all the stocks are participating to the rise we have in the last week, in the last 5 days. Relative strengths of small cap and mid cap here, the red line and the orange line are rising. So this is good news. And third, we have the seasonality. We know we are past October, we are in November. November up to March, May is relatively positive. And also if we take an old measure, the Dow Transport, we see that it was been correcting quite a lot up to the 200-day moving average. And now the relative strength versus the Dow Industrial is flattening. It's not going down anymore as in October. So the Dow Transport will not be a lag anymore. So everything is doing in the right direction.
So as we are on the topic of higher highs, are emerging markets also on set for higher highs?
Somehow, the one which is doing a strong higher highs is China. I mean, it's even a huge gap we had yesterday, and probably a bit too much, and it's going to be filled somehow. But what we see when we have this huge gap in the past, like at the end of September, it wasn't filled at all. And the upward channel is intact. So the rise should go on. What we should notice here is these two lines here on the top part of the charts. The black line is the outperformance of China versus the S&P 500. It's rising strongly. And even it's China which is leading the pack of emerging markets here on the orange line. So it's a good news that it is China which is leading the whole thing. If you look, for example, at India, which had been the leader, it's rebounding, certainly, now above the clouds. Relative strength is also rising a little bit, but it's not leading the emerging market. And if you take the lagger, which is Brazil, which came out of a downtrend, a clear downtrend now recently on the 5 last days, it is rising a little bit versus the S&P 500, so it's rebounding, but probably it's better to focus on China.
So we've spoken about emerging markets. Now what's going on with Europe and also with Japan?
Well, they used to be outperformer. Well, they used to be in October outperformer in Europe. And suddenly in November when we had the correction, as the good old times are saying, when you have a correction in the US, it comes down even more in Europe. And that's exactly what happened. We see the relative strength was declining here versus the S&P 500. And we had in Europe a much larger pullback, more than 3% on Euro stocks. Now look at this green area down there. It's the cloud, and it was able to rebound on it. So it's nothing dramatic. It will not go on its own down while the US market is going up. It will just be a little bit lagging. The other market, which is a bit surprising, is the Nikkei. We had a very strong uprise, and we had this doji reversal, which is a strong indication that we go from an uptrend to a sideways market. And the sideways market is probably going to last for two reasons. Number one, S&P 500 is on a relative strength outperforming the Nikkei. This line is coming down. Now it's probably bottoming, so it will not be too worse, but it's not going to outperform. And second, during the correction, the yen was rising, and yen is rising is not too good for the export in Japan. So as long as the yen is not declining, we will have to wait a little bit for some outperformance of Japan.
Fantastic. And finally, Bruno, can you just summarize what should our viewers at home have in mind for the rest of the year?
While we are bullish, we should look at still gold. Gold is sometimes an indicator of what could happen when things get worse. Now that the equity is rising, even though the gold has been bottoming in November, there is some risk that they test the support at below 1275. So in theory, if the equity is rising, gold should move below 1275 and move toward 1220, the previous low. Also, there is something we should keep in mind is the bonds, of course, because nobody speaks about it. Why? Because nothing is happening. It's kept in a range between 245 and 230. Now, if it's able to move above 245, it probably will rise all the way to 3%. The good news is that usually that correlates with rising equity. So even though people are going to lose some money on the bonds, the people who are long equity will not bother yet.
Well, fantastic, Bruno. Thank you so much for coming in today and sharing your thoughts with us.
You're very welcome.
Well, that's all from myself and Bruno, but we want to hear how you found this interview, so please keep kicking back to Dukascopy TV.